And joining us now is Matthew Circosta, an economist at Moody's Analytics there in Sydney. Matthew Circosta, thanks very much indeed for joining us. First of all, this trade surplus, what did you make of it?
Yeah, it came out a little bit weaker than expected, but that's mostly due to a strong jump in imports, and that's a really good sign for domestic demand. Basically, on the export side, exports were a little weaker as the supply constraints still linger down in Queensland. But overall, the data for the second quarter has been pretty strong on the trade front. In terms of the retail sales data, they came out a little bit weaker as well, and you saw a big cut in discretionary spending during the June month. And that's basically because consumers are less confident at this stage, and they're a little bit more cautious in their spending habits, being more savvy with regards to their income and spending. So you're really seeing that cut in discretionary spending. But all told, for the second quarter, growth definitely bounced back sharply after the flood-induced weak first quarter.
Matthew, what are the prospects there for the economy? There are many people are talking about this two-speed economy, with the West doing really riding off the back of the commodities boom, but the east coast of Australia, well, right now just seeing, well, more than a few signs of a slowdown.
Yeah, that's right. Certainly the commodity sectors are performing very strongly, but and some service sectors are performing weak, such as tourism operators, manufacturers and retailers are struggling under the weight of higher interest rates and the strong Australian dollar. But you're also seeing some service sectors performing well, such as the financial insurance sectors and the health sectors. And so some sectors are performing better than the average, some performing in the weaker the average. The upshot of all that is that the economy is performing around trend at this stage. So that's a good thing, and that keeps pressure on the RBA with strong inflation and rates in the coming months.
Yeah, many people are talking about the possibility of a rate cut. That's what I'm hearing more and more, but you don't buy into that.
Yeah, the markets are certainly factoring in a rate cut, and there has been a lot of discussion in the media and amongst commentators about the trajectory of interest rates, whether going up, down or steady. Basically, our view is, at this stage, that the RBA maintains a strong tightening bias. Yesterday's statement showed that they were still worried about the global economy and the ructions in financial markets. But overall, now that the global economy looks set to strengthen in the second half of the year after the US debt deal has been passed, and we see a stronger recovery in Asian markets, even though they're still seeing some tightening, we think that with the global recovery on firm footing, the focus for the RBA will shift to inflation. That's accelerating at this stage. That's going to worry them, and we think that that's going to prompt a rate hike by the end of the year.
Why do you think the global economy is going to strengthen? It's surely at a knife edge at the moment. We really don't know what's going to happen. What's your base case scenario coming from?
Oh, look, we think that the pace of the global recovery is set to strengthen in the second half of the year, and much of that is due to a US recovery. Basically, now that the US has passed this debt deal, confidence can return. Basically, that's what stalled the US economy in the first 6 months of the year, that caused businesses to shun hiring and weighed on consumer confidence and held back spending there. So now that that has been passed, the US economy should recover strongly in the second half of the year. Also into that factor in the Japanese supply disruptions that really weighed on the auto industry across the globe really in the first half of the year. Now that Japan's recovery is picking up, those supply constraints have eased, and so we should see more production in the US further on. And for us here in Australia, the main driver of growth is the Asian story, and that continues to be robust despite the fact that China and India are instituting more monetary tightening. We still expect those economies to continue growing strongly in the second half of the year, and that will really be a support for the Australian economy.
Matthew, thanks a lot for that. Now, Matthew Circosta there from Moody's Analytics joining us from Sydney, just going through that trade surplus data and also looking at the prospects for the Asian and indeed Australian economies.